Oh, yeah. Welcome to the Trading Pit, your virtual gathering for all traders. It's January night, and man, this week is just going to get wild. We've got the legendary generational change ETF. It's going to be announced, or it's going to be delayed, or it's going to be denied. We don't know. We're going to be talking about that today. I'm joined by two of my favorite analysts, JJ and Ben Lilly. They're going to help us unpack where the market's going, where it's been, where it's going, and maybe how you can think about trading. Although I'm not sure there's going to be much trading with the fireworks going on this week. But let's get started. JJ, as I always do, I want to ask the very basic question. With Bitcoin trading just shy of 47K, what's the mood of the market? Is it bull, bear, or boring?
We're preparing for the grand finale, so it still seems bullish for now. Not a huge fan of the current structure we're seeing. So if we take a look at this chart here I have up on the screen.
Well, hold on. So you're kind of bullish. I want to peg. I'm going to get you. I'm going to make sure I've marked you that you're down on something. So
bullish
you're
with a limited window, right?
So, limited window. All right. There's an expiration on this bull.
It's either I think we get a blow off top within the next week, or this is it. This is all you get.
Okay, blow off top in the next week. This is all you get. Okay, we're going to be talking more about that on the. I want to bring in Ben's thoughts and some things we saw on Twitter. All right, break down what the data tells us.
So last week, as we were discussing, there's this huge wipeout. We saw tons of longs liquidated on the way down to 40,000 or so.
Sorry, I don't mean to butt in, but tell us what's on the screen. What are we looking at right now? Is this spot? Is options, futures?
Bitcoin's price, and then we see liquidations underneath it.
Got
so basically, anytime we've kind of been covering this over the past month or so, anytime that we see the market get ahead of itself and really amp up the leverage slider, they get wiped out of position, right? So after we saw those longs wiped out last week, what we see over the past couple of days is all of these shorts were wiped out to the upside as we broke to new highs. So when Bitcoin went back to 40,000, people thought, hey, there's no way it's going to get back to new highs. And then it broke through, went past the 2023 highs and just cleared out that liquidity. So right now we're waiting on, obviously, the catalyst event of the ETF news to see if we can get that final surge above 50K. There isn't a whole lot of momentum here. Actually, if we take a look at Coinbase's order books, we see there's a lot of supply sitting just ahead around 48,000 or so. So this sell wall will either have to move. I doubt we'll just be able to eat through it and go straight to 50K from here. Look for this to move. Yesterday, we saw some substantial buying volume on Coinbase Spot here. You see that in this candle here. There isn't a whole lot of bid liquidity below. So if the ETF is delayed or denied, worst case, I think we would just see this free fall as there's not that bid protection you need to protect price from just sliding down below 40,000 or so, right?
So on the spot side, there's a lot of sell wall sitting there, and there's not a lot of buy wall sitting on the bottom. Is that what I'm hearing?
Indeed, yeah. So this is about over 1.2 thousand in net Bitcoin selling here. So this is about 1,000.3 of Bitcoin just sitting above 48,000 waiting to be sold if price were to get there. So I think if price were to move above here, we'd have to see some people coming in and just taking Bitcoin at the market to drive it up for that final surge above 50,000. But I don't know. There's something just seems off. So I hope we get this final blow off top, but I wouldn't be a huge better on it. Something seems kind of fishy to me, just instinctually right now.
So so your intuition's telling you that this is going to look for a blow off top, and then you're just waiting to see where the market settles. You don't actually have a price target, because we've talked in the past about more of a deeper pullback, which maybe would be like the 30K range, and then I think just last week we were talking about being more in the 40K range.
I still think we're going to see this pull back to the 50 or 200-day moving average at some point by March. It's just a matter of when, right? And that's not to say Bitcoin can't. We don't know how explosive this ETF news will be, right? It could fly up to 60K. So I'm not in a rush to jump in front of a speeding train here. But you do see the market losing momentum, right? Like it's made new highs since 2023, but look at the RSI momentum. It's pretty down here. It's kind of limp. That's not what you want to see. You want to see it surging much higher, and this is just kind of weakening. And at the same time, we see, like, as we've been hitting on, these whale wallets have been distributing nonstop since the end of December. Yesterday we saw a lot of longs closing out, so it could accelerate, right? Like, I'm not saying this is it, this is the top, but we're nearing it, and I think that's coming within the next week or two max. But we'll see the top and then consolidation back at least in the 40K range. I think at some point we have a large liquidation run. We test this 200-day, and then we'll see where we're at that point.
Okay, so spot looks a little limp, and there's definitely some sell walls that would prevent price from going up. The perps, they did some wipeout, and right now we're just really looking for the ETF news. And again, we don't know if it's going to be approved, it's going to be delayed, or it's going to be outright denied. Although I think the consensus at this point is that it's most likely going to be one of the first two, right? It's going to be approved or it's going to be delayed. But even that, I think most people are expecting some kind of approval, maybe with some caveats.
Yeah, the market's definitely priced for approval. So I think if we see delayed, that's just as probably just as bad as denial, right? In terms of like the amount of people that are long positioned for an approval this week.
All right, Ben, based on that assessment and what you've written this week about your plan and sticking to a plan, what are your thoughts on the price action you're seeing this week?
Feels like shenanigans here. There's a lot of uncertainty. There's a lot of slippage in the books. It's a lot of gaps. I think that's the way to summarize it. I think if we actually go back to what JJ was showing, the TRDR chart, I don't know if you still have it pulled up, but those buy and sell walls that you have there, I mean, you could see it's pretty clear, historically over the last 2 months, whenever it just kind of stacks up on one side or the other, price just kind of does a little bit of a mean reversion in a sense to just find out, where it needs to sit. And right now it's word from the desk was just the books are pretty thin. There's a lot of uncertainty. It's almost like everybody's a little bit frightened at the moment. On my screen, I have one of our models, our Kari model, up, and it's just showing that, look, there's volatility coming, and we're getting pings daily right now, which is just indication that volatility is imminent. I think I hit on it on the last espresso. And the fact that we just got another one today is just further indication that there is some uncertainty. If we get that blow off top, I wouldn't be surprised. If we get follow through, perhaps that even happens. There's just a lot of uncertainty to where like you do just need to read the order flows as it comes in. Try not to stay too locked into everything. You have to be a little bit open-minded. That might feel like it goes a little bit against what I was kind of writing about the other day in terms of, have your thesis in mind. But right now, what that thesis, at least personally for me, is that at this stage of where we're at with the ETF approval, you have to be a little open-minded. And if we do get a pullback, and it doesn't go that deep and it's not a big correction, you shouldn't be that surprised, because this is a new precedent. We've never had this historically, this moment. So you can't just lock yourself into what is going to happen with 100% certainty, because I guarantee you're going to be 100% wrong.
100% wrong.
Wrong here. We all have. It's just varying degrees of wrong.
It's complex adaptive, right? So the market is constantly changing at every second of the day, right? Like this sell wall we're talking about right now could be gone in 2 minutes, and then we're above 50K. But it's just analyzing the information you have at the time and making your best educated guess on what could happen next.
Okay, well, I do want to ask, you mentioned that your intuition's telling you that something doesn't quite look right. Ben, you've kind of confirmed that. You think there's some shenanigans going on. Is there anything from an options market perspective that's maybe also, I guess, leaning into that position, maybe solidifying your position there? Is there anything on the options side?
Deribit Insights actually had a nice thread this morning. They went through the different flows that were happening yesterday. And basically what happened is after we got that move up, there was just a lot of profit taking. So we saw a huge move up in Bitcoin's price, obviously went to new highs, but volatility levels or implied volatility levels didn't follow with it. And the reason why is that's because people were closing out positions rather than adding to them. So if we look at the open options positioning chart here that they tweeted, the blue signifies open options positions and the red indicates sold options positions. So we see there isn't a whole lot of options longs open above here, right? Like all that blue was closed out. And now we have some blue chunks here below, and these are open puts. So this is people that would benefit if Bitcoin dropped below, say, 42,000. And then we see some additional open put interest below 40,000 even. So now the options market's kind of positioning for the downside after they were long that whole way up. Doesn't mean it's going to go down tomorrow, but they're starting to take profits on those longs that they've rode up into this ETF trade and starting to switch positions here and going short a bit, or at least protecting long exposure. They hold spot.
Do they have a more granular chart on that thread, or?
No, this was the only one they tweeted out.
Yeah, because I was writing about it just yesterday about how open interest was rising in the options market, and I pulled up the IV chart for at the money, and I know there's not price right here, but where this is spiking, this was really before yesterday's big move in price, and so as that price started to run, implied volatility started to sink, and that's not necessarily normal, right? That's kind of like that's when your ears kind of go up and say, okay, what's going on here? Spidey senses are tingling, and you just kind of watch that because that gives you like a little bit of a tip of the cap that you need to stay alert.
Another interesting thing we saw yesterday is the Bitcoin stocks were selling off pretty heavy. So if you look at MicroStrategy, I mean, this could just be a retest of the 50 RSI line here, drop down to some important moving averages. So maybe it just sparks back up. But the fact that TradFi is starting to take profit and sell into the news here, it's a bit worrisome, right? Like it's not exactly what you'd want to see. You'd want to see some sort of bullish follow through and taking out of last week's highs. Now that Bitcoin's at a new high took out the 2023 highs, but we don't see these stocks following through. All the miners even are well below the highs they set a few weeks back. So it seems like momentum's declining in TradFi a bit.
Well, let me ask about that. There's oftentimes at the beginning of the year kind of a rebalancing narrative that goes on that's used to justify some of that sell-off. Could that be part of what we're seeing here?
Yeah, it definitely could be. But the biggest thing is the confluence, right? So we see kind of the momentum fading on Bitcoin. It looked like this was just a massive short squeeze to take out the shorts that entered around the 40,000 range. People thinking there was no way it could get back to the highs, and it did, took that liquidity. So now that liquidity's gone, we see the price topped out basically the exact moment the shorts were liquidated. You see how this lines up? So now it's a matter of, were there more shorts entering when Bitcoin has fallen? Like say that big wick down to 45,000 this morning. Did that entice more shorts to enter and give us the squeeze we need, the fuel we need to squeeze higher? Maybe, but you're kind of gambling on that at this point, basically. Like if everybody's long, then the max pain becomes down from here, almost regardless of what the catalyst is.
Okay. So I want to ask then, we talked about, so far we've talked about spot, we've talked about perps, and we've talked about options. Again, everything kind of giving this eerie sense that something isn't quite right. I think you guys would probably argue what we're expecting at this point is we see the approval, we see a blow off top, and we see some sell off, some profit taking us back to maybe the 40K range, perhaps even lower. Anything at the CME that we haven't covered yet? Because we've been talking about that last couple of weeks and sort of that really driving volume. Is there anything there that's again showing that TradFi is doing even more profit taking?
Still trading at a pretty steep premium here. I believe there's still a large amount of open interest, so they haven't fully delevered yet. We probably won't see that until the ETF goes live. But no, it's nothing extremely bearish in terms of CME open interest that I see here.
Got it. All right. Well, I think that's a pretty good assessment from the crypto markets. Let's talk about King Kong dollar that we always like to bring in. That's the external risk that we may see. We talked a little bit about rotation that could be impacting some of the crypto stocks, but the big one that would hit it would be the Dixie. So what happens if we, where do we think the Dixie's going now? And what happens if the news comes out and the Dixie's going against crypto? That's what I want to ask you about.
Well, the first thing here is, so kind of a perfect storm of a week, right? We have the ETF news coming tomorrow. And then what I don't think people are really focusing on now is that we also have a CPI report coming out on Thursday. And the way Dixie looks now, it's been resilient, right? Like it bottomed out at the start of the year, down around 100, and then it's just been going up, and now it's consolidating. We see it rejected against that resistance last week, but look, it's right back here. So this resilience is kind of worrisome, especially when we have a catalyst event coming up like CPI, which who knows, maybe it comes in hotter, and then we're back to that higher for longer narrative. And look how easy it would be for Dixie to make a move up from here, right? Like if it takes out 103, all of a sudden it's back above its 200-day moving average, has a ton of momentum off the lows, and we could kind of see a repeat of this fractal from July into September where it just chugged along, and this could be a liquidity drain.
Mm.
If there is a scenario, right, where we get the ETF approval and Bitcoin's blowing off, but if you start to see Dixie rise up alongside it, that's probably a good time to start. Like, it's not an immediate signal. When you see Dixie break out, it typically takes anywhere from a few days to a couple of weeks for Bitcoin to start reacting to the price of Dixie, whether it's sliding or going up. So if you start to see Dixie break above this 103 line and gain momentum above, that's a strong risk off signal, especially for like trading above 50K at that point. That's a good time to exit.
Good time to exit.
And you see it in the rates too, like we were talking about this.
Well, I want to. Yeah. Sorry, go on.
Go ahead.
Talk about the rates.
This is the federal funds futures.
Mm-hmm.
So when these are going up, it indicates rate cuts. And then since last week, we've been seeing these drop back down, which now indicates that the federal funds futures are betting on rates to remain higher. So they're no longer betting on the rates to continue to drop into September of this year. They've been dropping the past couple of weeks here. So this is obviously going to move massively based on what the CPI report says.
Yeah.
So if this drops back down, the dollar is going to strengthen. And if it goes up, the dollar is going to weaken. Either one is going to have an effect on Bitcoin. And it's just kind of like we have that ETF narrative and then the CPI. You could see how that volatility that Ben was discussing on all those alerts we've been getting is going to come in rather quickly here this week.
Well, I want to bring you in, Ben, based on the picture that was just painted by JJ. We talked I think it was last fall, about how the 2024 was going to be the year we were going to stop talking about the Fed. We got the first discussion on CPI coming out this week. JJ just mentioned that. What's your perspective? Is that still your base case that the 2024 we're going to move away from the Fed? CPI is going to cool and it's just not going to be as much of a topic?
Yeah, I still believe that. I think a lot of the discussions now on the Fed are really more like one step removed, where it's everybody else talking about the Fed and what is their expectation. Because what JJ was just showing was a chart, federal funds futures, of the expectation that, look, just a couple weeks ago, we were thinking possibly 100 basis points lower by June. Okay, it was almost like 75 basis points was becoming the consensus in the market. We've since come back a little bit from that. So if I pull up this chart here, this is the probabilities of the rates at the June meeting. And we can kind of see down here this 500, 525, this kind of teal color that kind of popped up recently. So this is just saying that, look, now there's some expectation here that maybe we only cut 25 basis points. But then more importantly, if you look way down there, you see a 525, 550 figure show up. I know it's very, very low. It's less than 1%, but it's now more than zero, right? So this is just the expectations of what the Fed will do starting to change in terms of the market's expectations. The Fed hasn't really said they were going to do anything differently, right? They're kind of just telling the market, like, just calm down. They're telling the market to calm down. Like, we just need to listen at this point. And we shouldn't draw any assumptions more than what they're telling us. And if you did that, then you were well aware of kind of what was bound to happen and kind of like that mean reversion once again taking place. And I think what we're actually going to be focusing on in 2024 a little bit more is actually going to be the Treasury. And so I'm pulling up this 30-year yield chart because if you almost squint your eyes a little bit, this green line is the US dollar as measured by the DXY index. And then the candle chart is the yields on the 30-year treasuries. They're pretty correlated, right? You can kind of see that they move in tandem. At times, they actually approach a correlation of 1 if you look at it on a 30-day interval. And so that's pretty important to note because if you actually pull away this DXY, so if I go ahead and remove it, you can kind of see it's got this nice resistance that perhaps is starting to float and become support. So 30 years had that massive move. Now, why was there this big massive move is that the Treasury wanted to issue a lot of 30-year yields. And then they decided to go ahead and right around here, pull it back. They said, you know what? Maybe we shouldn't issue so much. Maybe we need to pull it back. So yields went ahead and adjusted. It has since done it. But later this month, the U.S. Treasury is probably going to come out and say something positive, and we're probably going to see this sort of meander right around in this middle range here, which would give the dollar a little bit more strength, but perhaps not too much moving into the rest of Q1. But it's not something where it's completely, risk off, so to speak, from the dollar perspective.
Okay.
What worries me is like anytime you see this resilience, right? Like typically it'll hit this RSI mark, and as you see, like it'll fade down. So the fact that it's kind of consolidating around here into a major catalyst like CPI, like that's some reason to worry for sure. And if the CPI report sends DXY breaking up from here, I don't want to be on the wrong side of DXY. Like we already saw what happened in September, how bad things got deleveraged for that brief amount of time. And I think we could see a similar pattern play out here into March or into February. So just definitely something to be aware of. You start to see DXY churning above like 104, 103 to 104. Look out.
So what's the scenario that plays out over the next week, let's say, where you actually see DXY RSI rip through the 50 and continue on and maybe surprise the market a little bit?
I think we see massive washouts, not just in crypto, but in TradFi as well. Like there's so many, let me find, there's a good tweet that I retweeted from Jason Shapiro, and he was showing NASDAQ positioning. Let me find it here.
Hey, while you're finding that chart, for all the listeners out there, thanks for joining us today. I see we got a good number in the chat, and we have a question here from Adrian Fluter. I'm going to ask that in a moment, but if you're enjoying the live show, I'd ask you to like and subscribe. Hit that like button. It helps us get this out to as many people as possible. We want to share the alpha, obviously helping us to grow the channel and continue to put this kind of content out there. While JJ's pulling up that chart, we had the question from Adrian. It says, hey guys, Ben Lilly mentioned the SDR interest rate a while back. What's the current opinion on that? So I want to make sure we kind of give that a little bit of airtime. But JJ, you want to pull up your chart and then we come back to that question?
Yeah. So this is just showing net positioning in the NASDAQ market in terms of futures. So you see the blue line is some of large speculators, yellow, some of small speculators, and red is commercials. So commercials are going to be, say, dealers, things like that. But what you need to focus on here is the times that the commercials were net short and everybody else was net long. So for instance, we saw that in early 2022, commercials were heavily short, small speculators and large speculators were long, and that was basically the top of the NASDAQ. And it was the same pattern throughout 2022 when the NASDAQ was basically in a bear market, and it didn't switch until early 2023 when the NASDAQ recovered. Then the commercials were net long, and the speculators were net short, and NASDAQ obviously ripped up throughout the year. So now it seems like everybody is kind of trading on that expectation that the Fed's going to cut rates, that it's going to be extremely bullish, and we've achieved the soft landing. But the market's kind of signaling otherwise, and it doesn't seem like it's prepared for this scenario where DXY re-strengthens, say we get a hot inflation report, and all of a sudden DXY starts to take that liquidity out of the markets. I think we could be in for some turbulence, and those people would get shaken out of positions because everybody who can be long is effectively long. Like we see, this is basically the highest amount since 2022 that people have been long, and it typically doesn't end well when everybody's in the same trade, right?
Yeah. I feel like the last three shows are just putting water on the bull fire.
I mean, we've had 4 straight months of just beautiful bull market conditions. It can't last forever, so you have to be realistic with your expectations in the market.
Well, yeah, I agree. And if anybody ever listens at the end of the show, I always end it with the same comment, which is to have some dry powder. These can be excellent buying opportunities. If Dixie rips higher, you've got some dry powder on the side. That's a good time to invest. So it's not necessarily a bad thing, right? To see some pullbacks.
That'll be the perfect long entry point. So that, like to Ben's point, what he was asking, what happens if DXY rips up? I mean, we really have to see how high it goes and how bad the damage is at that point. Like if we look at Bitcoin, I think if we see DXY rip above, say, makes a clean breakout above 104 or so, and just takes out all of these averages, it's just in a trending bull market, we could see Bitcoin go as low as 30K within the next couple months. So just be prepared for a situation like that. Doesn't mean it's definitely going to happen, but it's certainly possible. The way things are lining up now, it seems like it could be in the cards for February, March. So I'm kind of planning on something like that coming.
Yeah. My question too regarding DXY was like, you got CPI coming in later this week. And I feel like the news around that release has subsided. The interest has waned. So something needs to take place to where it does surprise the market a bit. And maybe it doesn't, right? Because it's so close that it just needs a little push. But is there a, I guess, a situation or some sort of release that surprises the market that would create that sort of catalyst in your mind, or is it something else?
I don't think the market's prepared for a hot CPI print at all. Like after the past couple ones were lower year over year, like you see the way the dollar reacted, right? So basically since October, we've been getting cool CPI readings and it's just been trending down, down, down. I don't know. I have no read on whether it's going to come in hot or not. I just know that this chart is shaping up for a rip if it does. So I kind of have that scenario in mind, and I don't think the market's prepared for, we see it in the rates market, right? Like how these have been dropping. I think this was the whole reason why the market's been moving up so strongly since October is because these rates bottomed out and then they started to jump up, which was weakening the dollar. So if all of a sudden these revert back to the October lows, DXY goes back to the October highs, like we were showing on that positioning map, the market's completely off sides. Everybody's long, and markets move on positioning. So that's why max pain. That's why 95% of people lose money in markets, is because the market always moves against the herd. It'll let you get some gains for a while, but it's going to take those back when the point of max pain shifts, when the pendulum swings. People aren't prepared for it. They're not positioned. They don't have protection, etc. And then you see everybody trying to escape out the same exit of a burning building.
Yeah, it's like under delivering on its rate cuts in a way. Kind of that chart you showed. People don't really probably know how to read it, but if that line on the federal funds futures chart starts to trend down, that kind of means that rates are going to be a little higher.
You could think of it
longer.
like when this goes down, the dollar gets strong. When this goes up, the dollar gets weak.
Mm-hmm.
We could even overlay Dixie on top of it to see that.
Yeah. A little hard to read.
But to go back to that, while he pulls that up, to go to that question, because it relates a little bit to what we're discussing here, is, we were talking about the SDR, and I don't have the rate in front of me for that, but on my chart, I have the central bank rates of late for various countries that have begun to cut rates. Okay, so JJ was pulling up a chart for the federal funds futures rate, which is the expectation of what the federal funds will set their essentially borrowing rate at, which is kind of the floor for rates in general. And they haven't begun cutting. But the expectation globally is we need to front run the Fed. And so we see Brazil, Hungary, Peru, and the last one is Poland, I think, that you can't see on this chart. They've started to cut rates already. And so around the globe, you're starting to see this. I think even China has begun to cut rates as well, but they're kind of in their own bubble when it comes to rates. But the idea here is that globally, the cost to borrow is starting to drop. We're starting to see conditions loosen, but the U.S. is still that kind of benchmark where everybody's either trying to front run it in one direction or the other. And so if we're starting to see the Fed do what it's doing, where it's trying to tell everybody else to, hey, easy, slow it down, pump the brakes a little bit. We're going to get there. All right. We're going to get there. We don't need to do it right away. We don't need to have essentially the turnaround time of Twitter where the narrative changes on a 30-second basis.
Yeah. Well,
my kind of read on the rates market too is I think they're pricing in something happening in markets, like some kind of wipeout, rather than them just thinking that the Fed is going to cut rates just because for soft landing reasons or whatnot. I think it'll probably take a catalyst for them to cut rates. You'd need to see some kind of liquidity drain from markets in order for as many rate cuts as being priced in over the past couple of weeks to actually happen. There would probably need to be some kind of crisis event in markets for that to happen. And I think that's more so what they're betting on rather than like a Goldilocks scenario.
Okay. So I just want to summarize here because we just shared a lot of information. And I think of all the topics we touch on during these shows, sort of the macro view is perhaps the most difficult one from the perspective that it really is difficult to read the tea leaves there. I mean, we have some perspective here. It sounds like, okay, if the CPI comes in hot, then we can expect Dixie to really march forward. If it comes in sort of neutral or even closer to expectations, it's possible that Dixie just falls off a cliff, right? Because it's really just leaning even further into what the market was already expecting. Point is that the market is positioned right now for a cooler CPI print, and if that doesn't happen, you can expect fireworks. So
Exactly.
okay. So we do have a few more questions here. They are more macro related to the BTC milkshake and the meltdown theory. I think just guys, good questions, but I'm not sure we're going to touch on those today because I want to get back to more of a crypto-centric view as we start to talk about what trades are still on the table. So let's give that a little bit of airtime. So, we just talked about we're looking at a possible blow off top. JJ, I know I was asking you last week offline just about possible trades. Is this a time just to be sitting on your hands? We talk about having a plan and running it, to ground, making sure that you don't actually deviate. Is there a good trade to be looking at right now? Is this really a good time just to be taking profits and waiting?
I'm still waiting personally. Like I kind of want to see how today shakes out throughout the New York session, see where price closes at, and also what DXY is looking at. See if we get that news, right? Like if we get that news, I think that'll give a good opportunity to enter some short positions. But I don't see it here because obviously we don't know what the upside risk is. Like this could go to 60K, and obviously you don't want to be short at that point. But also there's not the momentum, or we don't see those bids, right? So we don't see any protection to the downside here. So if that news event doesn't come, it's delayed, it's denied, etc., I think it could free fall. So I'm kind of weary about being overly long here. I think spot's fine. Like if you just want to hold some spot and play for that upside, and then just have a plan to buy more if we dip lower, that's probably a solid strategy. But there's too many unknowns this week between CPI and whether or not this ETF is going to be approved. I'm not really in a rush to enter positional bias just yet until we have some confirmation one way or the other.
Okay. So again, sitting on hands is not a bad way to be, monitoring what's going on. Ben, what about you?
FOMO sucks. I don't know how else to express that, where if you're not in your position and you go ahead and you sell a little bit of spot and you see price just rip, it sucks, man. It's gut wrenching. And I know we talk a lot about, are we bullish today? Are we bearish today? What's your gut feeling? Are you selling? Are you buying? And a lot of times we say, look, things are getting overheated, right? We're due for a correction. Does that mean just go ahead and sell spot? Like my mentality is FOMO sucks and you can't expect it. So when we start to hear those things, like that doesn't mean go ahead, you sell it all and you wait for an entry lower. That's not really the mentality. So when I think of trades, like it's more of like, we see all this uncertainty unfolding. We see some warning signs that volatility is imminent. And I'm looking at the options market to go ahead and hedge some of that so that if it does do what we kind of expect it to do, then we'll be able to go ahead, scoop a little cream, and go ahead and kind of re-enter on spot. Or if you want to go ahead and take that cream and enter in a long position, you can do it. Right. And there you're not out of the market. And I think that's one of the biggest mentions here is you don't want to really ever be fully out because things move fast when they decide to move. And I remember when in 2020, when Bitcoin went ahead and broke its all-time high and Three Arrows Capital was running the grayscale trade back and forth and just pumping the market to the moon, price didn't slow down. And it just kept running, and there was no entry to be had, and there was no pullback. So if the ETF does get approved, again, going back to earlier in the show, like we don't necessarily know what to expect. What if the inflows do just actually happen, and it's not everybody just taking their Bitcoin that they have already and just handing it over to the ETF where there's no actual buy pressure? These are a lot of things that we don't know. They happen behind closed doors. They happen in meetings that we're not privy to. So stay open, right? Don't be a victim of just kind of micromanaging things.
Even when we had that huge run up in 2021, look at how sharp the downturn was, right? Obviously, it just kept going after. But you do get these washouts. and we haven't really, like, we saw a small taste of that last week on the move down to 40K, but I wouldn't really call that a massive washout the way this was when it went to 42,000 or so and then dropped all the way back to below 30.
Yeah,
So
that gamma squeeze was epic, right?
yeah,
That was unheard of, and everybody kind of got to learn the lesson of the silver market back in the day of kind of what is the gamma squeeze, and everybody was searching those terms and
yeah,
finding out some new terminology. But that was post all-time high too, right? And we haven't even hit that.
no,
Well, so I think just lessons learned there, that you're going to be a better trader with some exposure than being all out. I mean, I think, we got a bag on Capo a couple of times on our shows. I don't think we're trying to do anything personal, but I think having a bias one way or the other, being completely directional, gives you a problem, because then you have to double down on that position. And you said that sort of the urge to trade and to get in at the wrong time is much higher if you have no exposure. So you want to maintain that exposure, because the market, I think every signal we can look at, from the fact that we have a halving coming on this year, we have an ETF that is going to happen at some point, and we've got a change in narratives across the board, suggests this is something you want to be holding on to for a while, right?
the best setups come from volatility, right? So as we were talking about last week, like, look at this BVol chart, looks like it's ready to rip. So you don't want to be necessarily guessing. Like, if you are sophisticated enough to do things like spread trading and whatnot with options, then go ahead and by all means do it. But most of the times, your best entry points are going to come after that volatility appears, whether that's the upside or to the downside. So why would you speculate on, okay, well, it might go up 20% or it might go down 20%. And then if you're wrong, you lose all of that money, rather than waiting until the market gets so overextended in one direction or the other that your risk reward ratio is so heightened that it's a no brainer, right? So you wait for those moments when you see blood on the streets, whether that's shorts being squeezed or longs getting wiped out, and that's your entry point.
And yeah, to get back to also kind of what JJ's saying too, and really what am I looking at? It's, I have it on my screen here. It's a term structure chart, and it's implied volatility. You mentioned implied volatility was dropping as price was ripping. Like, that's an opportunity. Like, look at this light blue line here is today's implied volatility curve, and this is February right here, sitting at 61, and it's below what it was 3 days ago. Like, this is opportunity in the market. This is the end of January. If we're going to have a decision here, we're going to have blow off tops and we're going to have pullbacks, and you're looking at February timeframe, like, this is low, right? This is a low volatility reading. Like, it should, if we're going to get any move that we think that is going to happen, like, we should be having 890, closer to 100 vol on Bitcoin.
I think that's coming.
Yeah,
I really do. So, like, I don't even think that the problem is that some of these options, like, if you go out to, I was looking at derivatives order books, for example, and I'm looking at February, the price, it's not insane, but you could get like 40,000 puts for 560 or so right now. I don't think that's a bad price. If you want to hedge it with some upside calls, problem is that these carry a high premium here. So you're looking at like 1,000 for 50 calls or so, but some kind of strategy where you have exposure both ways isn't the worst thing here if you can figure out how to configure it. I think that's probably a good play if you are absolutely driving yourself nuts by sitting on your hands and you have to have a position. Just hedge it one way or the other. Figure out how to hedge it into this event.
Yeah, and if you still have your holdings, right, you're still rooting for upside. You're still rooting for crypto in general. Like, you don't want to necessarily have that negative feeling like, oh man, I hope something really bad happens, that price pulls back, and I get my entry back, and I'm gonna change my mentality altogether. Like, that just, it sucks, right? FOMO sucks. Let's just try to avoid that.
You don't want to be a FOMO trader. All right, okay, all right. So again, I just want to summarize here. It doesn't look like there's really good entries. JJ just made the case. Wait until the volatility has really played out, that the market's overextended, because your risk reward is going to be better off. Ben made the case, have some exposure. Don't be totally out of the market so that you don't become that FOMO trader that you have to align to one side or the other, which we don't want. Okay. So I think for anybody who's asking, that's kind of the perspective today. But I do have another question that we had asked by the account on X about the generational, or is ETH about to bottom in January against its BTC pair, and just never bottom for the next 2 years. So I want to ask that question to wrap up today's show. What do you guys think is the likelihood there? Is ETH going to bottom in January against BTC and not return to that for 2 years? Or are we going to see more volatility over the next 2 years in which it could return to it a couple of different times? Ben, I'll start with you.
That's what I'm watching because of that scenario that was just laid out. Like, I don't see this thing being suppressed. There's too much developer mind share. There's too much layer 2 activity. It has one of the best monetary policies in crypto. Its usage on the token is rising. When it decides to run, this thing is going to run in an inelastic fashion. I'm constantly reminded, why do you watch the price of gasoline as you pass all those tanks day in and day out? The price moves every day. And we understand what inelastic assets are, like oil. When price starts to run on those things because supply is being changed, it's being cut, it just rips. Okay, this is what's going to happen to ETH when it finally decides to go. So try to just tone out some of the negativity out there. Just bear with it. Just, copy paste those comments for a later date. They'll come back. Just stay patient. When it finally decides to go, it'll run.
I'm gonna pin you down, Ben, because this was a specific request. It said, will the bottom happen in January, and will it not retest that bottom for, I believe, 2 years?
Yeah, I'll take that.
You'll take that? I love it.
I mean, I'm just watching the RSI. It's starting to dip below 30 on the weekly again. And usually you get the bottoming out within 2 to 3 weeks. So it's going to be close. And when it finally does decide to go ahead and bottom, I don't think it's going to be quiet. I think it will be pretty known. I do think this is going to wick lower on the ETF news.
Okay. All right. We got one opinion answering that question. JJ, what's your perspective?
I don't know if January, but definitely by the end of Q1, I think. So looking at this chart, but I think this is just a classic long squeeze. Everybody's been over allocated ETH since the merge. And you see a lot of negative sentiment around ETH, but you don't see it show up in this chart, which means that I tweeted this out last night. I don't think people have capitulated out of their ETH holdings yet. And we haven't seen people switch over from Bitcoin to ETH. Like, there just isn't that catalyst needed. So looking at this chart, obviously one of the worst structures you could imagine here. And it looks like it's ready to break down further. Whenever you get this decisive wick down, that's probably going to be the bottom. And what you really want to look for is volume here. So when we see volume here, that means people are swapping their BTC for ETH at this point and vice versa. And that would probably provide the bottom that we need. And then I think it might return in this fashion. So if we look at 2020, had a big move up, came down during COVID, and then it came back up into the halving, crashed into the halving and retested that bottom. So probably something similar to like that. It drops down. We see a lot of volume, starts to trend up, comes back, retests that bottom sometime around the halving, and then it's just up only forever from there.
Yeah, your June 2022 is case in point on your volume. Just right there. Just watch that, and that's your capitulation move.
This is right before the merge hype started happening, right? So we saw everybody go all on ETH. They rode it up, tested the highs, and then came back down. I mean, I have no idea where this bottoms. It could theoretically bottom as low as 0.2 or so. I don't think so, but I'm not in a rush to call a bottom on this, but I do think it's coming within the next couple of months, and definitely something to keep an eye on.
Okay, so I think you guys, so you're saying not necessarily, you're not going to commit to January. It could be Q1. You are expecting a capitulation event. And then what about those 2 years? Do you think it's going to be strong enough? It's going to outperform. It's going to continue to grow against BTC for those 2 years, JJ?
Yeah, I do think we see it at new highs. I think it probably, let me go to the all-time chart because 2017 highs. I don't know if it gets here. Possibly in the long run, but I don't think it's going to get here in 2024.
What makes you reserve? What makes you say you're not sure?
The way it's trending, basically, right? Like
just the chart.
Yeah, just looking at the chart.
Yeah,
it has the catalyst. There's so many unknowns. Like, it's just hard to play that far out.
All right.
I would change my mind, obviously, if we started to break above 0.10. Then yeah, I'm all for the flipping. But You need to see that confirmation, in my opinion.
Yeah, I don't know if we'll do the flippening, but I do think it gets above 0.15 for sure. And mostly this is just due to what happens when we get this positive feedback loop on ETH that we haven't really ever seen. We get negative supply growth on the asset, the gas fees start to climb, the burn starts to climb. You get all of this kind of positive feedback loop taking place in the market. Oh my God, ETH actually is the greatest thing ever since sliced bread once again, right? Because this is how, everything just rotates. The narrative is just like spinning, wheel, fortune wheel. But
literally nothing changes but people's opinions. That's it.
Yeah,
everything things remain exactly the same. Yep.
Okay,
I did it here long enough. It's
right.
Sold.
So I think I've pinned you down as much as I can. You two, both I think long-term bullish on Ethereum, expecting sometime in January to the end of Q1 to have that capitulation event, which will be a great time to be moving into Ethereum vis-a-vis Bitcoin. I do want to ask you guys one last question before we wrap up, because I put out some of my thoughts here, which are not so much based on the price history, but looking a little bit at what I see as narratives for 2024, 2025, specific to Bitcoin. I mentioned ordinals coming onto Bitcoin, ETF channeling attention to Bitcoin, ESG pushing adoption of proof of work, which is drawing net new demand for Bitcoin, retail skipping the risk curve, and degens skipping Bitcoin, Ethereum, even Solana going directly to memes. Benjamin talked about that last Thursday, a sort of concern that he has. We're seeing some different market structure. U.S. regs forcing activity offshore, which would, if you want to have exposure to BTC, or to crypto, would be more on the BTC front, and then continued churn or competition on the L1 narrative. So I don't know how strong any of these are really going to play into the price action. I think if we looked at previous cycles, I see Ethereum having a very strong cycle in 2016, 2017, ICO mania. Then if I looked at the last cycle, it's very much driven by DeFi. I think there's an expectation now that we're going to continue to see something around DeFi, but also Web3. But I think that there's definitely some competition, right, for Ethereum in a way that I didn't really see it necessarily in previous cycles. And I also think that, while Bitcoin has been King Kong and has remained from a market cap perspective for several cycles now at the top of the mast, it's possible that it even gets more attention, outsized attention in the next 18 months. And that could just pull it even further forward. What do you guys think about that argument?
I think we get the ETH ETF, and that renders all other things obsolete, essentially. Like, I think ETH is going to be the only altcoin that gets an ETF for the foreseeable future.
Mm-hmm.
And I think that'll probably come sometime around Q2 to Q3 of this year. And that'll be the catalyst event that sends people flocking back to ETH and returns that narrative and just the supply demand factor of it, right? Like, we know ETH supply burn mechanism and whatnot. And then when you add on institutional demand for it, I think it'll rip faces and outpace the rest of the altcoin market, in my opinion.
Okay. Ben, give you the final word before we wrap up.
This is for ETH specifically, not Bitcoin?
Yeah, I mean, my case was, I was sharing some of the perspectives and what could drive Bitcoin higher vis-a-vis ETH. But yeah, I mean, what's your perspective on whether or not those narratives will matter with the price, the ETH BTC pair?
Permissionless and security, I think those are so strong for Ethereum. I'm constantly reminded, look, if you got a portfolio over $100,000 or $200,000 and you want to go ahead and do a swap on Ethereum on their layer 1 with the highest security, essentially within crypto, that fee is not substantial, right? And if you go ahead and go on another layer 1 where it's less decentralized and your security is essentially downgraded, is it worth it? Is it worth it to go ahead and operate on DeFi on those other protocols and those other L1s? I think we get constantly reminded. It's just at smaller denominations for retail, especially, a lot of that capital is mercenary and it will fly, right? But with Ethereum, I constantly hear this, like, no, I'm not going to go to another layer 1 and go do all those activities. I'm not, because the security is where it's at. But then the second thing is the permissionless aspect and be able to see data and have it be relatively transparent to where like you can trust things better. I think we constantly see that demand surfacing just in society at large, that this narrative will start to kind of percolate through of, okay, what is a public blockchain? Why is it important? And you'll start to see that, especially with AI and all those things. I don't want to get down that rabbit hole.
Yeah, well, that's a whole nother show.
It really, really opens up kind of the importance of what's happening there.
Okay. All right. So you heard from the two of them, those other narratives, they don't really see them slowing down that ETH BTC pair. And you should be looking on the lookout for that ETH capitulation moment. It will be a fantastic time if you want to turn some corn into some wheat, or if you've got some dry powder and it's time to buy up ETH. But with that, that's going to wrap up today's show. Ben, Lilly, JJ, thanks for coming on, talking on this momentous week with the Bitcoin ETF is coming. It's going to get wild, guys. So I suggest you tune in every Tuesday, every Thursday to hear us talk about the market, go through what we're seeing, because I can tell you 2024, even going into 2025, is going to get nuts. So with that, I'll leave you with my same comment I do every week, which is have some dry powder, be prepared. This is Marconi White signing off.